So, welcome to spring selling season. It's something that you hear in the media a lot around spring being the time to sell. Is it fact? Is it a myth? We're going to unpack it today. Whether there's increased buyer activity, renter and seller activity. Long story short, it is actually a thing. Spring is selling season. So we're going to make this part of a little mini series on selling season. And the first thing that we wanted to cover today, to get you ready, Skye, Pete, and I are going to break down our top 3 tips going into selling season. So Pete's going to cover the buyer's agency side of things. I'll be covering everything finance. And Skye will be going through everything property management and potentially sales related as well. So let's jump straight into it. Pete, let's jump into your top 3. First one that you've got written down for us to go through is set realistic budget expectations, aka don't chase under market value. Do you want to tell us more about that?
So basically what I'm trying to say there is you can really lose a lot of weeks. What I've seen is people will, for example, look at price guides and they'll believe that's what it actually is worth, or they'll chase under market value. So they'll put offers in that are way too low. That's never going to secure them the property. They're basically chasing this unicorn price. But the problem is market doesn't wait for anybody, and 3 to 6 months can actually go very, very quickly if this is the approach you adopt. And just doing that, you're going to price yourself out of the market and you're never actually going to be able to buy where you want to buy.
Yeah, for sure. Is that something that you're saying actively at the moment? Is that people, I don't want to say they're being cheap, but they're being cheap. They're trying to chase a budget purchase and it's actually setting them back?
Yeah, it's happening quite a lot, particularly because the last 12 months, it's been a bit, I wouldn't say slow in the property market. Prices have still been moving, but there's been less people attending open homes, which then buyers assume, oh, it's not as busy. I can get this property for cheap and stuff like that. So it's definitely been more prominent. But I feel like now we're in spring, we've got the 5% deposit changes, we've got lower interest rates. We're going to have a lot more people coming through the open homes. And if you're still chasing that expectation, you're just never going to buy. And you're just setting yourself up for failure. And to be honest, a lot of wasted weekends as well.
Yeah, for sure. Skye, you being on the other side of the transaction a lot of the time, are you seeing similar as well when it comes to people looking to buy, putting in offers that are significantly below price guides and just missing out consistently because their expectations aren't there?
Absolutely. And the reality is the market will outstrip them. And so whatever saving they think they're making is going to set them even further back. And that's where people don't understand that the real estate market always forgives you. People get so caught up in a number and they get fixated, go, well, that was the most I was going to spend on a property. But in reality, most people don't move into a property to live in it for 6 months when they're purchasing. So whichever, even if you did technically overpay, the market will forgive you. In time.
Yeah, for sure.
It's impossible to actually overpay.
If you buy in the right spot. So perfect segue, I feel, to Pete, your second point. No such thing as the perfect property. Walk us through that.
What I mean by that is people will get hung up on really small items that can actually be fixed. So you've got your carpets, you can upgrade the kitchens, the bathrooms, things that are more so cosmetic and can be changed over time. And if those things are present, they will make up an excuse to not make an offer on the property, even though it's well within their budget and they can pretty much secure it with the budget that they have, but they opt not to do it to chase this unicorn perfect property. And what I tell clients is whatever the issue is, if you can change it, then it shouldn't be an issue. But if we're talking things like location, if it's on a busy street or it's got a school behind it or a train line, something that you can't fix, that's when you do need to be like, yep, okay, it's not perfect in that sense, so we're not going to go forward with it. But if you can change it cosmetically or some kind of uplift, then it's definitely something to consider if it's within your budget.
Yeah, for sure. And we've talked about this before, but I think it'd be a really good time to walk a new listener through the marriage counseling exercise around how to really pick the perfect property and the sequence that you go through with your clients to make sure that they're focusing on the right things and not focusing on the wrong things.
So we get clients together, we send them one document each, and it's basically what are their negotiables and non-negotiables. They go away, fill that out on their own. Then they send it to me. We jump on a call. And the idea of that is because that's where we're trying to iron out this perfect property principle, because you're never going to find that. And often partners aren't talking with each other either. They often don't realize what the other one wants. And one partner will find a property they absolutely love, and then the other partner will be like, no, I don't like it because of X. And had they known that, they would have probably saved themselves 3 to 4 weeks of searching for the property, because they would have been a lot more zeroed in, or actually on the same page in terms of what they're looking for. So that exercise really helps iron out those details and be like, okay, these are the non-negotiables and these are the negotiables. That's what we need to focus on. Yes, it's not perfect, but if it's got these negotiables there and it's within budget, it's definitely something that you do need to act on.
100%. And I think going into selling season, where there's going to be, yes, more properties on the market, but also a whole lot more purchases entering the market as well, it's absolutely critical for people to get crystal clear on their negotiables and non-negotiables, right?
Yeah, you're not going to have the time to sit on it and think about it for 3-4 weeks. Some of these properties that are very much owner-occupier appeal are going to sell within the first week or two, unless it's an auction campaign and you've got a bit of time. But if it's private treaty, which is a topic for another day, it's going to sell quickly.
Yeah, for sure. And it plays off on both sides of the fence as well. When you're looking to sell your property during selling season, Skye, it's also, there's no such thing as the perfect offer, right?
No. And many people get undone by the first offer because they think, oh, that's my first offer, there must be more. It's not often the case. Usually your first offer is the best offer.
Yeah, wholeheartedly agree. So for the vendors out there, even though it's selling season, don't look a gift horse in the mouth, right? If it's a good offer, take the good offer.
It's just human instinct, right? To just have that greedy process that, of course, there must be more because we've just started. But generally, those people who are making the good offers, they're in that part of the cycle that they've had enough, they're serious, they're like, right, we want this property, and they will offer accordingly.
Yeah, for sure. Great segue to due diligence, funnily enough, talking about negotiation and doing your homework before putting in an offer. Pete, your third one was do your own DD. So not just do it, but do your own. Do you want to walk us through that?
So the classic example is where you go and look at an open home and you ask the real estate agent all these different types of questions, and they'll do their best to answer them. But the most common response would be like, oh, I'm not aware of that. Oh, no, the vendor hasn't made me aware of that. So the real stuff that you really need to do from your due diligence point of view is reviewing the disclosure documents, checking on easements, seeing how they're impacted. And really, that's the conveyancer's role. So you need to build your own team, and that's what the process is involved in terms of doing your own due diligence. Yes, try and do it, but it's not for everybody. Not everyone wants to go and read through a 100-page contract and all of that. So get your conveyancer involved early. If they're asking for a fee, pay them the fee. It's the best money you're going to spend for a contract review, and they'll give you the advice that you need, because you can't trust what the real estate agent is saying, because at the end of the day, they actually don't know. They plead ignorance on purpose. They don't want to know. It's not their job to know. I actually don't blame the real estate agents for doing that. It's really buyer beware. So as a buyer, you do need to take the accountability, get the experts around you, mainly the conveyancer, just to make sure that there's nothing on title that's going to cause any issues. Because imagine buying a property, wanting to put a shed at the back, but there's an easement at the back and you can't do it. Or a pool or something like that. You just don't want to be falling into that trap.
Yeah, for sure. And Pete, let's say for the first home buyer who's listening, can you walk us through what is an easement? Because they might even go to an open and a real estate agent just casually will just be like, oh yeah, there's a little easement out the back, and play it down. And first home buyer hasn't been through this process before, is just going to be like, okay, cool, an easement, whatever, no big deal. What is an easement and what are the actual risks involved?
So an easement's basically just grants right-of-way access to a third party. Normally they're drainage easements, so you've got all the piping and that running at the back of the property as an example, or maybe on the side of the property, and it gives permission to, like we're based here in Adelaide, permission to SA Water to come onto the property if they need to, repair the pipes or the drainage, and then they just basically can leave. But what they will do is they'll come on the property, they'll dig it up, and then they'll restore it back to how it originally was. So easements aren't the worst thing. Originally was in quotations, but it depends on what you've done. because easements aren't the worst thing in the world. If they're running along the back fence line, even on the side there, it's not the biggest issue unless you do plan to do something with that space. Now, 9 times out of 10, you're not going to do anything with it. You can still actually subdivide and do all that kind of stuff. It's when people have built over easements, that's when it becomes a big issue. Because you do need to seek council approval to do that, as well as third-party approval, so like SA Water's approval. And if you've gone ahead and built this massive shed and you've put a slab of concrete down and everything like that, the real risk there is when that third party needs access. I mean, they may never need access, but they might. If they need access, they pretty much can tear that thing down. So they'll break up the concrete, they'll take the shed down to get access to that particular part of the property, and they will not restore it because you've actually encroached on the easement. So that to me is I would never touch anything like that. I mean, the other day we looked at one and it had it was a beautiful property and it had a rumpus room at the back. It was really, really good. And that was the main appeal of the property. But there was an easement along the back. They've illegally built, so it's called an illegal build. They've illegally built this rumpus room on top. And the value in this property is that rumpus room. So if you're told that you have to take it down, then you've lost a lot of the value in the home. So we wouldn't touch that. But if there's easements in that and they're not built over and all that, we're not too fussed. It's when they've been encroached on, that's the real risk. And the conveyancer will be able to look at that.
That's a great example of the value of a conveyancer and doing your own due diligence. Because the easement's just one thing, right? There's so many other things that are title related or in the contract that are like an easement that if you miss it, it can cause a really expensive headache, right?
Yeah, well, the plans that you might have to do with this property, you can't do it. Or it's already been encroached on or something like that and you've lost the value and you have to come up with the costs to do it because you have to bear those costs. If you've illegally built over it, you have to bear those costs. But there's other things too, like you said, in the title that the conveyancer will pick up on and save you a lot of time. And contract reviews are only like $300 or something like that. So worth its weight in gold. Yeah.
So Pete, for you, the top 3 things to look at during selling season are setting a realistic budget. So don't chase under market. No such thing as a perfect property. So get really clear on what you want and do your own DD, aka make sure you pay your conveyancer for a good contract review.
So, Imti, what are your tips for buyers who are looking to purchase this spring selling season?
My first one would be just because you can borrow it doesn't mean you should. I've had a lot of conversations with first home buyers in particular recently, and the last time they might have been looking was this time last year, for example. And since then, they've had pay rises, rate cuts have cut into play, and they find out that they can borrow a ridiculous amount of money. This first home buyer couple that I was talking to, they were budgeting to spend $600,000 to $700,000 on their first home, and they found out that they could actually borrow $1.2 million. And when you think about that from a repayments level, that is huge difference. And the biggest mistake that I see everyone make when they're looking to buy is they set their budget based off how much money the bank's willing to give them, instead of understanding their own budget and where that can stretch to. So usually when we're having a chat with a client, I won't talk about borrowing capacity. I'll talk about how much they can purchase based on how much they can borrow and how big their deposit is. But more importantly, I'll actually ask them, how much have they budgeted monthly for this? Because going from renting or boarding to an owner-occupier property, you're not just picking up the monthly repayments and the mortgage. You're picking up council rates, you're picking up insurance, you're picking up all these costs that you might not have right now. And what I see really often is people will be, okay, the bank will lend us $1 million. We only planned on spending 700, but hey, let's go buy for $1 million. And what inevitably ends up happening in those situations is they end up selling really quickly. So within the first 12 to 24 months, they realize that even though the bank was willing to give them the money, they can't actually afford it. And so they sell, which is a really expensive exercise. You end up tens of thousands of dollars backwards compared to where you started most of the time. Or they've realized that they've compromised their lifestyle completely. And they end up in a situation where, yes, they're paying for a roof over their head, but now they're not going out for dinners anymore. They're not able to travel anymore. They're living off mee goreng instant noodles that cost $2 a packet because every single dollar that they've got is going into their home loan. So yeah, first one definitely would be, just because you can borrow it doesn't mean that you should.
It comes down to cash flow, doesn't it? What I always say to clients is, what are you comfortable to be out of pocket every
Yeah.
single week? And reframing it that way, as opposed to, what's your max budget?
Yeah, exactly right. Because what you're finding at the moment now, Pete, is in a dual income household, one person's whole income is going towards servicing a home loan sometimes.
Definitely. And that's the big eye opener, isn't it? For most people, once you say that, it's like, well, okay, we're going to have kids soon, so we might not have that income. And it really starts that conversation.
And that's why we're, even with our existing clients right now, the hot button topic is, how much cash savings have you got in the bank? Do you have, for example, family plans coming up? And also, do you have adequate insurances in play in case, if one of you isn't working, you're not in a situation where you need to panic sell? But yeah, just because the banks will give you the money doesn't mean that you should take it.
Agreed. And what about your second point around buying lenders, not cheap lenders?
Yeah, this one's always a good one to unpack, because when most people think of home loans, they think get the best interest rate. When you look at all the marketing that's out there, your uncle at the barbecue who's apparently the property guru and knows everything about the world, and anyone generally from, I guess, the older demographic as well, the main thing that they always talk about is interest rate. And it'll be focus on the rate. That should dictate where you go when you're buying. Now, let me walk you through a client situation where this completely backfired, and also talks to what a buying lender is. So I had a client come to me and they had been actively looking for the last 3 months before reaching out to me. What ended up happening was their previous broker was not meeting their standards in terms of communication. That person could have had family stuff going on. It is what it is, because I don't really like to punch down on my own industry. But they ended up reaching out to me through a referral from a family member, and they were positioned with a pre-approval with the cheapest possible lender that they could get a pre-approval with. And I'm going to name them because I don't use them. So they had a pre-approval in place with Bank of China. So they have some of the best rates you can get. Just don't hope for anyone to pick up a phone call or get back to you within 2 weeks. So yeah, they had a pre-approval in place with Bank of China, and essentially every time they were putting in an offer, they had to put in a 21-day finance clause. And when someone is selling a property, the last thing that they want is uncertainty. And what a 21-day finance clause does is create uncertainty, because the seller doesn't know that the property is sold or even will sell for a minimum of 21 days. And after talking to them, they were missing out on properties consistently. The market that they were looking at buying in, the prices had increased as well because time had gone along. And what we really boiled it down to was, there was nothing wrong with the price that they were offering. It was actually the terms that they were offering. And that's when I introduced the concept to them of a buying lender. And what a buying lender is, they might be slightly more expensive. And when I say slightly more expensive, I mean maybe 0.25% to 0.5% annually, which isn't a huge amount, because what people get fixated on is, I'll be on that rate for the next 30 years. Realistically, most clients will refinance out of the lender that they buy with within the first 2 to 3 years. So really, you're not paying that much of a penalty. But the difference is how long it takes them to process an application, pick up a file, and get finance approval across the line. And what we were able to do with this client was, we took them from a cheap lender, lowest possible rate, positioned them with a purchasing lender, and had the confidence for them to go out and be like, okay, you only need a 7-day finance clause. We can do the valuations before the property goes under contract, so we don't need to have a delay for a valuer. And I know that the lender's going to pick up the file within 1 day, at worst 2 days, and we'll be able to turn it around like that. And changing from a rate-based lender to a purchase-based lender, we were actually able to go under contract within 2 weeks of them getting the new pre-approval. And it was purely because they were able to go in and offer 7-day finance instead of having to offer 14-day or 21-day finance. And that's one of the biggest value adds that we do through that process. Pete, you could probably talk to it as well, where we've done the same thing in tandem for clients, right? Where it gives you greater negotiating power if you can go in with a 7-day finance clause, for example.
100%. And we never want to give up the subject to finance clause, but the 7-day clause, plus you got your cooling off period, it's just gold. And not between you and I, but with another client, we lost a deal because the bank refused to do anything less than 21 days. Both offers were equal, so everything was considered equal. And I knew we had to be 7 days, but their bank would not allow it. So we lost the deal. Actually, I think we had a bit of a higher number. I think we were like $2,000 higher than the offer that actually got accepted, purely because they could do that 7-day clause. And I guess the bank refused to do it for my client and we lost the deal.
100%. And Skye, you'd see it when you're selling properties, right? You
Yeah.
would see vendors who turn down offers because of extended finance clauses and maybe even take less money because finance will get over the line quicker.
Yeah,
Yep.
you want a sure thing. You don't want you said it, the uncertainty that you could take your property off the market for these buyers and then it all falls apart and you're back to square one. You could be offering 10, 15K more. You would accept a 7-day over a 21-day every day of the week.
100%. And look at it through a seller's lens. Would you rather be selling your property and have an offer that's 7-day finance and 30 days to settle, or 21 days finance and 45 days to settle?
Yeah, 100%.
And so I think for selling season, aka buying season, it comes down to being with a buying lender and not focusing on rate. That would be my second point.
Yeah. And if your mortgage broker's not willing to do 7 days, then find a new one.
Look, you said it, not me.
So we'll move into number 3 on that topic. So your third point is, and I'm not quite sure what you mean, but lender discount season.
Yeah. So as well as selling season, spring tends to be lender discount season. So don't need to dive into this one in too much depth, but as there's more properties selling on the market for higher values than this time last year, most people who hold a current home loan are probably building equity that they don't know that they have. And as you build equity, lenders are willing to discount your home loan rate. So as well as it being a selling and buying season, it's also a great discount season because let's say a few houses around you have sold for 100,000, 150 grand more than what you bought at. Hello, you've got instant equity, right? And that equity will be able to get you a discount on your home loan. If your current lender's not willing to give you a discount, walk with your feet. Engage your mortgage broker, get them to have a look at what's available on the market and whether it's worth moving for you. And the other component of that equity piece is also potentially accessing that equity and becoming a buyer yourself. There's a lot of people who bought pre-COVID, early COVID, for example, who are sitting on 20, 30, 40% equity that they haven't realized that they've got. Their properties increased by that much, and they can potentially access that to go buy an investment property, to do the renovations on their property that they wanted to, or just to use it with their current lender to be like, cool, I want a better discount because the property's worth more now and I've been paying my home loan. I should be rewarded for that. So yeah, it's a quick and easy one, but as well as it being selling season, it's also lender discount season.
I wasn't quite sure what you meant by it, but I get it now because a lot of people don't realize your interest rate is tied to your debt levels. So if you bought a property with 90% debt, if you're all of a sudden sitting at 60% because the property's gone up in value, you're going to get a much lower rate than what you were originally. So you're lower risk to the bank, basically.
Exactly right. And no bank's going to come to you directly and offer that proactively. They're still going to charge you the same rate as if you had 90% debt on the property, even though you only have 60% debt on the property. And the rate difference there could be massive. It could be 0.5%, it could be 0.75%. It can make a really big difference and add up to hundreds of thousands of dollars over the life of your loan.
Yeah, if you can get someone on the phone though, because I've got a blender in particular that I'm using and it's just impossible to get anybody. But yeah, is that something brokers do? Do they make those kind of inquiries on your behalf or?
Yeah, great question, Pete. So we've got a internal 6-monthly and 12-monthly review process. So we'll look at our clients' equity position, so how much debt and what their property's worth 6-monthly, and look at what rates are available in the market, what debt level they're at, and whether there's a better deal out there for them. As part of that process, we'll also approach their lender and request a discount on their behalf. So it becomes very set and forget. And then 12 monthly session, we'll sit down with the client, revisit their goals and make sure that their loan matches what they're trying to do at the moment. They might have life changes on the horizon, babies, travel, all of that sort of stuff, and might need to restructure. Or it could be as simple as clients waking up one morning and they've got an email from us saying, hey, we've gone to your lender and here's 0.3% off your home loan rate. Have a good day.
And that's definitely not the norm, is it? That's not what most brokers do.
Yeah, it's not normal. I feel like a lot of the focus goes on the front of writing the client's loan and getting them through that process, but there's probably a big opportunity in post-settlement support, which is where we're really big with helping our clients, is taking as much of that admin out of their hands as we possibly can. Yes, it costs us money to do it, but at the end of the day, a happy client's always going to refer more clients and stay for longer. And we want our clients achieving their property goals, not just being strapped to debt. And that's how we do business.
It's a really good approach. So to round out your top three then, before we move over to Skye, we've got number one, just because you can borrow it doesn't mean you should. Number two, buying lenders, not cheap lenders. And number three, lender discount season.
Don't forget them. I think, as you said, perfect time to roll over to Skye. Top three. So number one, get real about rental returns. What do you mean by that?
Feel like I could talk for the next 20 minutes on this one. But first one, if you are looking at buying a property and the selling agency has provided a rental appraisal, don't just take that rental appraisal. First of all, they have a vested interest in either making it look good. So we'll either see rental appraisals from the selling agency that are overinflated, because that's the only way to make the numbers work, or we will see them particularly low because it might be that the property management department in that agency are just not interested in growing. So the property manager who has done the rental appraisal has gone, oh, I just don't want this. I'm going to price it cheap and make it easy. And you see a lot of really big ranges at the moment. So it might be the rental appraisal being $650 to $750, and the only number you see is $750. For big ranges, I'd definitely be asking more questions and getting a second opinion. And in terms of the rental returns, the other thing people need to consider as prices will increase, which we've all agreed they will increase in the next 3 to 6 months, that doesn't necessarily mean that your rental return will increase as well, particularly at these price points. So what I'm seeing out there is an affordability issue and an oversupply issue in that bracket. So if your property is only renting for between $400 and $600, that will be a very in-demand price point, because that's where a lot of renters' affordability sits. Once you start creeping over $600 a week, which, let's face it, is a mortgage repayment these days, there's less tenants who can afford that. There's less quality tenants who can afford that. And just because you're paying an extra $50, $100K for the property doesn't mean you're going to get an extra $50, $100 a week in rent. It's quite often the opposite.
Yeah, for sure. I think we're seeing that a lot on our side of the fence when clients are going for loans for investment properties, is they might be able to get a strong rental return on a property that's selling for, let's say, $500,000. But as that price range creeps up, that gap between the rent return and the mortgage repayment gets bigger and bigger. And that is happening at rapid paces at the moment. To your point, Skye, I know you've spoken about it a lot, where there's probably this price ceiling at, let's say, $700 a week, where it gets a lot harder to get tenants, but also the prices of those properties are a fair bit more expensive, right?
Yeah, exactly. And that's the assumption a lot of buyers will make, that, well, I paid $800. Surely I could get $800 a week for it. No, I think 5% yields a thing of the past, but I think it's just understanding what is happening in that marketplace. What are comparable properties available? If there's 10 4-bedroom homes available in that suburb, you're competing on price. That's all it is. We're just seeing a bit of excess supply for rentals, and that's going to have an impact on price.
For sure. So if you were to drill it down into one sentence that you could give a landlord for spring about rental returns, what would it be?
Be conservative. run your numbers on the lowest possible number. And if you get more, great.
Mm-hmm. Perfect. And I think that's common practice around the board, right, Pete? You're probably doing that with your clients as well who are looking to buy, right?
Yeah, always taking the lower end of the rental amount. But if it seems too high, like Skye and I, we just having a conversation about it before. If it seems too high, then just check what's on the market and probably lower it again.
Yeah.
Mm-hmm. Let the market dictate where you're going.
Yeah. Well,
Yeah.
we were talking about a suburb before that we're looking at rental incentives because there's such a high supply that nothing is shifting. That's probably my other point. But there's a real assumption from a lot of landlords that we're still in a housing crisis, and that's just not the case. It's an affordability crisis.
Mm-hmm. Probably a good segue, actually, to your second point around don't get sucked in by the media. So you just said that there's this kind of narrative around a housing crisis, but I know you're bullish about this and you pull people up on it all the time that for you, it's not a housing crisis, it's an affordable housing crisis, right?
Absolutely. And I'm not sure people understand the difference. We have certainly seen a few years where there wasn't enough houses and we were getting all these quality tenants and you'd have 5 applicants to choose from and they're all great. We just didn't have enough houses. That's no longer the issue. And what the media report, let's remember, we've said it before, it's always at least 3 months behind and the rental market moves a lot quicker than that. Month on month, it's moving fast. And at the moment, it's been trending down because the number of quality tenants that are out there looking, we see on the media these videos of 50, 60 groups of people lining up at a property. I can tell you what's happened and how that has happened is they've undercooked the price and everyone's gone, oh, this is good value because that's what quality tenants are chasing at the moment. They know what good value is. We all have access to the same information, but people see that, these crowds of people, or they see the sob stories about people who can't get a rental. Those people who can't get a rental have either done the wrong thing and the people that are lining up, it's a bargain of a property.
Mm-hmm. Yeah, for sure.
With your point about done the wrong thing, I also think it's unrealistic expectations. And I get hot on that, to be honest. Like if you're a renter, you need to have realistic expectations about where you can afford to live.
Oh my goodness.
Because a lot of the time they want something they can't afford and they'll continue, just like buying, continue to submit applications and basically waste their time trying to get into a property they can't afford.
Yeah, and that's the reality. I heard, well, I saw one of the comments on one of my videos this week that, and I feel for her, I really do. This woman has 7 children and she's like, no one will rent to me. And I'm like, I can understand the dilemma, but where are you choosing to live? What type of properties are you looking for? And I don't know what her income is, but the challenge with that in trying to find a house big enough to house 7 children, chances are that's going to be expensive. She probably can't afford that on paper. And no property manager is going to put her into a property if it's taking 60, 70% of her income. And that's where we come into the affordability conversation. Yes, there's plenty of tenants out there. They literally cannot afford your properties. That's the problem.
So tying it back to selling season, buying season, renting season, it sounds like what you're saying is don't get all your updates from Channel 7, right? Take what the market is giving you and look at what's actually happening instead of just taking a news headline at face value. And if you're a landlord going, oh, there's a housing crisis, why isn't my property renting ASAP? Well, it's probably more complicated than that. If you're selling your property, which I know you've got a few on the go at the moment, Skye, again, it comes down to, yes, there's people struggling with getting into housing because of shortages, but different price ranges are reacting very differently. And there's markets within markets, right?
Yeah, absolutely. And I just feel like we say this all the time, but I continue to have the same conversations with landlords, sellers, buyers. It's all the same. You're probably the same, Pete. There's just so much misinformation about what's actually happening because people are looking to the wrong sources for that information. They're either talking to the sales agent who has a vested interest to paint a picture to sell it to you, or they're, looking online for their source of information when they should be speaking to people who have boots on the ground.
No, I think that's a great way to summarize it. And to bring us home strong, your third one, in terms of your top 3 tips when it comes to selling season and spring. Presentation and price still matters even in a hot market. I'd argue it's more important in a hot market, right?
Yes, in the sense of, I'll touch quickly on the price thing because it follows from what we're just saying about affordability. For both landlords and sellers, this is still an important topic, even when it's a hot market. So, price, particularly, everyone is more educated now than ever before. It's just not a simple matter of going, oh, well, hopefully we'll just wing it. It's so price sensitive, whether you're selling or renting. You've got to get that price right because people will vote with their feet and they simply won't show up. And if you're not getting that activity, well, then nothing's happening. You're not selling the property or you're not renting it. Either way, you're not getting your outcome. So pricing a property, either for sale or for rent, is crucial. And presentation is the same. Because we're all paying more than we've ever paid before for housing, people want aesthetics. Presentation matters. It's not just a matter of sticking your signboard up and going, I should be right.
Yeah, for
It can
sure.
happen.
Mm-hmm. No, definitely. And Pete, you could probably talk to the fact that you're more likely to get a discounted property if it's not presented right?
100%. We love it when it's not presented right. It does come with a little bit of extra risk, but yeah, if it's not presented, it's definitely a window of opportunity there to, I don't like to say under market value because the value is what you pay on the day, but you can definitely secure it for a cheaper price. And then you can do your quick paint carpets for a reasonable price again. And then the comparables from that property to other properties is likely going to be cheaper than what they're selling for, if that makes sense.
Yeah. And like, I guess the things that your face just lit up when we talked about like poorly presented properties, you're like, yeah, because we're getting a deal. Let's just touch on what that actually looks like though, because it might paint. So we looked at a property before that the walls bright yellow, they're bright green. What are we looking like? $2,000 for a quick paint job, maybe 3. I saw another property earlier this morning. The property itself was nice. The carpets were hideous. They were light beige, heavily stained. The cost to actually replace those carpets would be like $2,500 at most. And they're trying to sell this property for $650,000, $700,000. Why would you not spend the $2,500? Remove that objection entirely, because I would look at it and go, ooh, yuck, don't want to live there.
Well, we went through one the other day and there was no power. So it had bad walls, bad carpets, no power, and it was just really dark and gloomy when you walked in.
Do you know what the cost is to get a temporary power connection? $150 max. That's insane to me that people don't prioritize these things because it's so off-putting to both buyers and tenants. And I just don't understand how this even happens other than you've got a really poor agent on your team. But such simple, small cost things make such a huge difference in both selling and renting. Don't just assume because there's lots of people ready to buy that this doesn't matter.
If anything, it probably matters more than ever, right? Especially with tons more listings going to be on the market. You don't want to have the property that sticks out like a sore thumb and immediately everyone looks at it and goes, oh, it's the little brother of everything else that's listed because it's not as pretty. Yep, it's the black sheep. It's now worth 10, 20, 30 grand less than every other property that's selling in that street that just looks better.
And in all reality, your rate of return on what you spend is far more significant in a hot market than in a slow market too. Because, the rate of increase on that as opposed to if you don't do it.
I think that's an awesome point to really emphasize is essentially selling season. Do it right. Because your returns are going to be compounded one way or another. If you don't do it right, your losses are going to be a lot bigger. And if you do it right, your returns could be a lot bigger as well.
But on the flip side of that, though, if you're not doing it right, it's going to be 10 times worse for you.
And I think that's the thing that needs to stick in the front of people's minds is the 10 times worse. It's not just the upside. It's actually what are you looking at losing. It's probably a good point to take us to our toxic takes before we drive it home and wrap up. Pete, we'll start with you. If you were to have a toxic take, one sentence about selling season, what would it be?
Might be 2 sentences because I just thought of it, but we've got 4 months left in the year. Christmas period, you take off another 2. Really, we've got 3 months. You got 3 months to accept that the market is what it is and get over it and actually take action. Otherwise, realistically, you're not going to be back in the market until February next year because agents take a break and all that kind of stuff. So you got a 3-month window now to try and get the deal done.
Mm-hmm. Great. I think my Toxie take is actually very similar in terms of timing. You're probably ready now. And if you don't take action now, you'll potentially be locked out until this time next year. Skye, what would your toxic take be about selling season?
Don't be delusional. I think that's like more of everything that we've all said. Because if you're delusional about the reality of the situation, it's going to pass you by.
Mm-hmm. Awesome. I think that's a great punch in the face to wrap us up on. Part 1 of our selling season series. So we've got an episode coming next week on everything auctions. And then the week after that, we're going to pull apart private treaty. Essentially, if you're looking to buy, looking to sell, looking to rent, those episodes will be really helpful because they'll give you a great frame of reference of what you need to be across during selling season. Anyone who stuck it out until the very end, we appreciate it. First timers, welcome aboard. People who came back, thank you again. If you do need help on your property journey, all of our contact details will be in the show notes. So anything sales and property management in Adelaide, you can reach out to Skye. I know that she has plenty of landlords who are interstate and loves working with them. Anything buyer's agency related that you need, so securing an investment property or your primary place of residence, Pete's your go-to, and his details will be down there. And yours truly for anything finance, so residential finance, commercial, SMSF, business finance, anything along those lines. Get into contact with all of us via the show notes. But as always, thanks guys.